As revenue concerns drive push to slash fuel levies amid Middle East crisis.
I think there are some cabinet ministers who think that tax should not be cut and prices should be allowed to operate as they are.
And the economist urges Ghana to prioritize industrial and agricultural growth to create sustainable jobs and tackle rising youth unemployment.
It is agric and industrial manufacturing that employs a greater proportion of the Ghanaian population. We have to look at the sectors that we want to grow.
Plus, government of Ghana eyes 7.57 billion cedis in crucial treasury bill auction to stem under subscription. I am Michael Ogbodu. Details of these and many other stories coming up shortly. Please don't go anywhere. Thank you so much for your time. Straight into our top story. Executive Director of the Center for Environmental Management and Sustainable Energy, SEMSE, Benjamin Nsia, has suggested that government's move to review the fuel price build-up is primarily driven by mounting revenue and economic concerns. Government on Thursday, April 9, delegated authority to the Ministry of Energy and Green Transition and the Ministry of Finance to determine which specific taxes or levies within the petroleum price structure should be adjusted in the coming days to cushion the public without crippling the national budget. According to Mr. Nsia, this decision likely stems from three critical scenarios, with a heavy emphasis on balancing fiscal stability against the need to provide immediate relief to consumers.
First scenario is that there was a bit of difficulty with respect to agreeing on tax cuts in the petroleum downstream. I think there are some cabinet ministers who think that tax should not be cut and prices should be allowed to operate as they are. The second scenario is that there could be lack of data at the cabinet level with respect to the debt situation or the debt-owed IPPs against the performance of the various levies on the price build-up. So further information will be needed to ensure that appropriate interventions are taken in the downstream. The last scenario could also arise from the fact that maybe government wants to monitor the market in the coming days and ensure that tax cuts are appropriately done to maintain price stability in the petroleum downstream. There could be a situation where taking off maybe 1 Ghana cedi from the build-up could not yield any impact because price on the international market may escalate further. So these are the reasons why I think that the decision pronounced by Cabinet with respect to delegatory power to these ministries has arisen.
Benjamin Nsia is the Executive Director of the Center for Environmental Management and Sustainable Energy, SEMSE. Away from that, economist Professor Peter Quartey has noted that while Ghana's economy is showing signs of a takeoff due to improved macroeconomic stability, government must be more selective about which sectors drive that growth. According to recent data from the Ghana Statistical Service, the Ghanaian economy recorded a total growth of 7.5% in January 2026, driven largely by a surging services sector despite slowdowns in other areas.
Speaking on the country's recent economic performance, Professor Quartey argued that the current growth is a natural result of stabilizing key macro fundamentals. However, he warned that growth for its own sake is insufficient if it does not address the pressing issue of youth unemployment.
With the relative stability we have seen, I believe the economy is beginning to take off. The parameters are right, the macro fundamentals are right for us to take off. What we have to guard is the sectors that are growing. You find that most of that is the services sector. There's no high value services. We are churning out a lot of young people from tertiary institutions, etc. And we are not providing the jobs.
Services sector accelerated to 9.6% growth, up from 7.6% in 2025. Fueled by gains in trade, finance, and communications. Industry growth slowed to 7.2%, down from 9.7% the previous year, primarily due to reduced oil and gas activity. Agriculture's momentum slowed significantly, dropping from 9.3% in 2025 to 4.5%.
It is agric and industrial manufacturing that employs a greater proportion of the Ghanaian population. It's exciting, it's good to see a higher growth rate, but we have to look at the sectors that we want to grow, not any sector at all. There are some sectors we want them to grow faster than other sectors.
While the overall economy remains on an upward trajectory, the composition of that growth continues to shift heavily towards services as agriculture and industry face a cooling period.
Away from that, government of Ghana is returning to the domestic market today with an ambitious target to raise 7.57 billion cedis through its weekly treasury bill auction. This upcoming auction is being closely watched by market analysts as it follows a recent period of 3 consecutive undersubscriptions. The following 3 Business News Desk report has more.
The sudden shortfall in bids has broken an impressive streak of 11 straight weeks of oversubscription recorded earlier this year, signaling a potential shift in investor sentiment or a tightening of market liquidity. The Bank of Ghana will conduct the auction for government across the standard 3 tenors of 91-day, 182-day and 364-day bills. The 7.57 billion cedis target is considered aggressive, especially as government seeks to cover maturing debts and finance its fiscal requirements amid a cooling demand for short-term paper. Earlier in the year, declining inflation, which reached 5.4% by late 2025, had fueled a robust easing cycle, encouraging investors to lock in yields. However, the recent undersubscriptions suggest that government may need to offer more competitive rates to attract the necessary capital. The outcome of the auction will serve as a litmus test for the domestic market's appetite for sovereign debt. If government fails to meet its 7.57 billion cedis target again, it may face increased pressure to raise interest rates or explore alternative funding avenues to bridge the financing gap. Institutional investors, particularly domestic banks, remain the primary participants in this segment. Their bidding behavior will reveal whether the recent dip in demand was a temporary market correction or the beginning of a more cautious trend in Ghana's fixed income landscape.
And that was a 3 Business News Desk report. Meanwhile, trading activity on the Ghana fixed income market surged to 3.48 billion cedis on Wednesday, April 8, driven largely by persistent investor appetite for short-term liquidity and government treasury bills. The session, which saw a total of 775 trades, highlights a market successfully gaining depth following the domestic debt exchange program, though it remains heavily skewed towards sovereign debt and short-term instruments. The following News Desk report has the details.
Treasury bills continue to remain the market's engine, accounting for 2.17 billion cedis, more than 60% of the total turnover. This concentration reflects a flight to safety, with investors favoring the lower duration risk and quick rollovers of T-bills as government continues its reliance on short-term domestic funding. There were encouraging signs for the broader market. DDEP bonds contributed 671.33 million cedis to turnover, suggesting restructured bonds are finding firmer footing as investors adapt to the new pricing environment. The new conventional bonds, a 2033 bond, recorded 81.85 million cedis in trades, closing modestly above par with a 12.11% yield, a positive signal for the return of conventional sovereign paper. Sell buyback trades reached 532.59 million cedis, highlighting the active use of government securities by institutions for cash management. Despite the sovereign recovery, the corporate sector remains marginal, with only 19.87 million in total volume. Led by the Cocoa Management Board, private sector debt is still too small to shift the market state-dominated structure. Ghana's market is recovering in volume, but not yet in composition. While the return of conventional bonds is a silver lining, the market remains overwhelmingly centered on government paper and short-term T-bills.
We'll bring you updates now from the currency and the commodities market.
interbank foreign exchange market, the dollar is selling at 11 cedis 2 pesos. It recorded no change. The British pound is selling at 14 cedis 82 pesos. It gained 2 pesos. The euro is selling at 12 cedis 91 pesos. It also gained 4 pesos. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities market, Brent crude is trading at $95.60 per barrel. Gold is trading at $4,784.48 per ounce, up by $65.33. Cocoa is trading at $3,162 per ton, up by $34.
And those were updates from the currency and the commodities market, bringing an end to the business news on Sunrise. For more stories, please check out our website, s3news.com/business. I am Michael Ogbodu. Thank you for tuning in. As always, please stay safe.